Grains ending mixed on Friday with cattle to the plus side. Don Rose with U.S. Commodities has analysis. And Don, let's talk about the mixed trade that we saw in the grain. Soybeans higher, feed grains lower. Was that technical spread action? What was going on Friday?
Yeah, I think when you end of the week, I think you have to be very careful. And I think what you're seeing is a lot of the trade is saying, get me back to a position that I can manage with the volatility that we have going forward. So if you look at it, the wheat market is the one with the big short in the market. We saw some buying to end the week. The corn market's the big long in the market. We saw some liquidation there. Soybeans a little bit on the short side. And we saw some buying there also evening up. So I think it's that as we're going forward. It is concerning with some of the dry weather around, but it is early to be talking that yet, but it's also on the watch list.
What are we seeing in terms of the length in the fund community in the corn market? Are they getting out of that market? Are they pushing shorter in soybeans and wheat, do you think?
Well, I think the one thing about it, the funds do have to manage money. So if a market's not moving in the direction that is profitable, then they go to work and change their position. And it's usually goes from one end to the other. Remember, they were up at a huge long position in corn up at the top when we were 521.5 on the July corn, and we sank back. They've cut their long position down into the mid 200,000. But, I think that'll continue to liquidate if things don't improve on the demand side. Same thing on the wheat market. They've been pressing pretty hard on the short side. They're probably going to liquidate some of those positions as we get into the spring and with the uncertainty with the tariffs. So, no doubt, the funds are just moving money back and forth. And I think they'll probably try to get with the stock market under pressure. Remember, that gives a lot of nervousness even for any trader. And what they do is they reduce the size of their position to compensate for the volatility in the market. And that's what I expect going forward. And that's also good advice for most traders. Reduce your position to a comfortable level that you can handle big swings. And that's what the funds will do.
And the volatility is going to continue to be high here as we go into those USDA reports you talked about. And because we're chasing all these tariff headlines, right?
Yeah, we're, it's headline tariffs. Over the weekend, it seems like we have some that really bubble to the top. And then, of course, we have the acre stocks report at the end of the month here. And then in between times, we're watching the weather, and, we're 30% planted in Texas on corn. And, real concern that the blowing wind, even if you get a little moisture, it sucks it out pretty fast. So it's a reminder that how key it is going forward. Of course, we always say planting the dust in your bins bust. So we'll see if that's the case.
So corn and soybeans, are we already starting to trade a little bit of this acreage talk, discussion of more corn acres, less soybean acres?
I think we definitely are. I think if you look at it, since the end of last year, the producer was already starting to plan. So looks like those corn acres are certainly going to be up. The USDA on their outlook doesn't look like they're that far off. Corn acres up 2.5 to 3 million. The surprise would be if it even went to 4 million, just with the insurance disparity between corn and soybeans, the profitability level, if you will, or the lack of profitability in the soybeans. So I think, that is on the horizon. I think also from a demand standpoint, we'll see. We got the stocks and all positions report also on the same day, going to give us an idea of what our last quarter demand was. So, while we're talking those, we're watching the tariff battle, and we're watching the weather. So, this market's going to move technically pretty fast, and you got to be pretty accurate with some of the things you're looking at technically, Michelle.
Yeah, so talk about that, because we did hold some kind of areas we needed to hold this week, including like the $10 mark in May soybeans. Do we continue to hold those areas of support?
Well, I think that is a psychological one that we need to hold. And, we do have kind of sloppy double bottoms on the soybean market, like you say, on new crop beans, $9.96 to $10. So that is giving you at least something to trade off of from a support chart standpoint. Of course, you're on the ledge. Same thing on corn. You have a spike bottom at 451 and a quarter on July's corn. That was the March 4th big tariff fears with Mexico and Canada. Same thing on the wheat market. We have a spike bottom down there too. So the thing it does, it gives you something to trade off of. And, it gives you these markets, a lot of them, I think they're going to be in range markets, running wildly up and then wildly down. And you have to be careful you don't get caught in between. Watch the bull spreads. They've been bull spreads when we're going up, bear spreads when we're going down. So that helps give you a little bit of direction, Michelle.
Don, get us up to date as well on the progress of South America in terms of the harvest. And I know we had some upgrades and downgrades of both the Brazil and Argentina crop this week.
Yeah, if you look at it, Brazil's crop is basically, let's just call it soybeans, 70% harvest. The farmer there was pretty aggressive selling. He's backed off a little bit now on the soybeans. The corn, safrinha corn, basically it's moved into the vegetative state. Just when you look at it, harvest starts there on corn the end of June, July, August, corn harvest, 1.7 billion bushels of corn exports. So we're watching that. Same thing with Argentine corn harvest, moving along pretty aggressively there. About 1.4 billion bushels of corn exports. It's been dry there, well documented. Production was lowered by the exchange in Argentina. But I think that, since those numbers actually, I think weather's probably improved. That's probably not going to be downgraded anymore. Probably even could go up a little bit, Michelle. And the Brazil soybean crop could go up a little bit from here. So think that that's pretty well baked into the market.
And then let's talk about cattle, because we did into the plus side in live and feeder cattle futures. We had sharply higher cash, but yet we didn't make new highs. Does that concern you?
Well, we'll see how the futures go. Typically the market, the futures market really gives you the best direction. What's really happening. We had key reversals in those back months on cattle, October on out. You didn't take those out. You had key reversals in feeder cattle. Now, a key reversal means you either have a major top or a major intermediate top. So, it is concerning when you see those things. Now, you should have been lower to end the week, not higher, but you still held in place here. So I think, if you don't react big to big news like we had on Friday, cash cattle just raced to the upside and the futures market pushed up, but it didn't race high. It should have been able to take out the high. So we'll see how it trades next week. But, I think when you look at the cattle market, we know the supply side is tight. It's the demand side and the recessionary fears going forward that you have to be concerned with, because let's face it, there are choices for the consumer to buy. He can buy down to some cheaper protein levels if he wants to. We'll see if that can continue going forward.
So what in your mind would confirm that the top would be in here in the cattle?
Well, let's just look at the June cattle. The top was 201.65. We challenged that to end the week. And I would say that next week, if you can't take out those highs that we put in to end the week, and if you can't take out the highs that we put in before on June, I would say that's going to be a big warning sign. And, nobody taps us on the back. You kind of just look at it yourself and make some decisions. But when you have funds sitting huge longs in a position, you know that at some point in time, Michelle, they're going to get out of their position because that's the only way they can bank their profits, So that's the concern. And the demand side of the beef, I know we talked that, the beef on the exports, we export basically 10%, we import basically 10%. So it's a zero-sum game, not like the hogs where we export 25% of our production. But when you say that, it is also means that you have a demand that you're focusing on. 90% of your demand is domestically, which means that you're back looking at the economy and making sure that if the consumer buys it, like we say, if you don't sell it, you smell it. The Packers losing about $100 a head. So he's not in a position, he's chasing the numbers because they're not there. You're going into the spring grilling season. So we'll see how all fares out, Michelle. But I would say it's a market that buyer beware.
And we're coming into end of month and end of the quarter, so we'll see if the funds do take some profits in the cattle. Let's end on hogs. We ended mostly higher for the day, but it's been a struggle here, mostly because of the tariff news, right?
Yeah, I think the big anchor in the hog market is, going forward, we know we have Easter ham season coming ahead. We have the seasonal up in the summer months on hogs. So those are all true. But on the other side of it, March 4th, we had the big tariff concern with Mexico and Canada, 25%. That's the day that we put in the lows on June hogs, for example, 92. So it does tell you that we're concerned with the tariffs more than we're concerned with the tariffs more on corn and pork than we are on anything else. So, yeah, the hog market, I would say, we know that you get up around this 103, 104 in the summer months is just too much. And we know that the tariff so far fears has put us down to 92. So call that the range, and we'll see if we can get any news that pushes us out of that, Michelle.
Gotcha. All right. Thanks so much, Don Rose, U.S. Commodities. That is Markets Now.